Shale oil has been discovered in the US, Argentina, and New Zealand. This, according to many analysts, might shake up the global oil and gas market. For a look at these, the implications of shale oil for the oil markets in Africa, we are joined on the line by Geoff King. He is a futures editor at Platts. Geoff, it's great to have you on the show today, and I want to first of all get your thoughts on the oil price. We've seen some volatility recently. Before we talk about what shale oil means for Africa, your thoughts on where it's going. I think it's always a difficult thing to call.
Well, good morning. I think the one thing that we can say at the moment is that you're right about the volatility. What we've seen is over the last couple of months, from mid-December, we saw a pretty steady growth in the oil price. Things were looking good. But in the last couple of weeks, we've quickly pulled back down, and I think yesterday with WTI, we hit the lowest levels for the year. Really, it's a function of the fundamental market at the moment, demand and supply. And this morning, we're seeing prices pulling back a little bit, and that has a lot to do with China and the growth maybe not going as fast as one thought.
So it's, like I mentioned, it's always difficult to call, but where do you see it going for the rest of the year? Say, where do you think oil is likely to end this year?
Well, I mean, I think if the last 2 months has shown us anything, it's very hard to predict where prices will go and where they are going. I mean, we were in a very strong and steady increase in price, and then we've quickly fallen back down again. But having said that, I was reading one of the analyst notes yesterday, and last week in London, there was one of the major oil conferences for the year. And what this analyst was saying was there's a general feeling that prices, well, for Brent at least, will be in the $100 to $120 range. And the reason for that is because that's what Saudi Arabia wants. And Saudi Arabia, being the major producer in OPEC and globally, of course, has the ability to position itself to keep prices in a sort of range that's not too high to impact growth, but at a level which satisfies its budgetary needs.
Well, like I mentioned, it's always tough to call, but if it does stay above 100, I think that would be very good news for Nigeria and, of course, all the other producers from Africa. But let's talk about shale oil and what that means for African producers. Your thoughts on this?
Well, I think the key thing, and I was speaking with someone from the CME Group a couple of weeks ago. The CME Group, of course, runs NYMEX. And one of the things that they made clear was with the growth in production that we're seeing in the US at the moment, where the production is at around 20-year highs, and it's continuing to grow to the point where various international agencies have forecast that US production could be higher than Saudi Arabia by 2020. What it means for Africa is having to find new markets, and I think that the feeling is that there'll be a push for Nigerian and Angolan crudes to head towards Europe, which makes perfect sense given declining North Sea production and other issues there.
All right, let's end on this note. Your thoughts on the recent projections of the Nigerian government to produce as much as 4 million barrels per day by 2017. Do you think that's a realistic target given the level of investments we're seeing in the sector right now? We know a lot of international oil companies are pulling back on investing in Nigeria simply because the petroleum industry bill hasn't been passed.
Well, anything's possible. I mean, they've set this target. It's an ambitious target, and good luck to them. I think the key at the moment, though, is ensuring that we get the countries like Nigeria get the production capacity that they have, the existing production capacity that they have. I think, and that involves securing pipelines and these sorts of things. Whether they can make it to 4 million barrels per day by 2017 remains to be seen, and if they can, it's whether they can produce at that rate, given the security issues that seem to trouble the oil market there at the moment.